p.m. Eastern Standard Time using the data available at that time.
Let's go to Glenn in Massachusetts. Hey, Glenn, what's going on?
You know what is good for us is Tom O'Brien providing an unbiased source of information for us investors. You don't have an agenda. It's just to cut through everything and to give us the facts. I want to thank you.
No, I appreciate it, man.
And now, here's Tom O'Brien.
Good afternoon, everyone. Welcome to the Tom O'Brien Show. Ken Shreve here, filling in for Tom. He's a busy man these days, promoting his book, doing workshops. I'm not even sure what city he's in today, but always happy to fill in for Tom when he needs me. I'll be handling the first show from the first hour of the show, I should say, from 4 to 5 Eastern. And then the very capable Steve Rhodes will be here from 5 to 6. Don't forget, folks, my own show, Breakout Investing with Ken Shreve, is on the air every Tuesday and Thursday from 3 to 4 Eastern, just ahead of the Tom O'Brien Show. Again, that's Tuesday and Thursday from 3 to 4 Eastern. Breakout Investing with Ken Shreve, and my new newsletter, Ultimate Growth Stocks, is available at TFNN.com. I launched about a month ago. I just published my fourth weekly update today. I publish every Tuesday, and I have email buy alerts, sell alerts, and market update alerts in between each weekly update. So be sure to check out a trial to Ultimate Growth Stocks on the homepage of TFNN.com. You can click on the Newsletters tab up on the top, and then click Investment Newsletters, and you'll see Ultimate Growth Stocks in there. And I'll go over my my methodology a little bit later in the show, but let's see where we're at with this market. Kind of sputtered into the close. The Dow down 25 points, it looks like, down 0.2% to 12,356. The Nasdaq underperformed again, down nearly 13 points, 0.5% to 2746, and the S&P 500 down about a point, 0.1% to 1316. So, not big losses today, but after the losses seen in the market on Monday, I think there were certainly some that wanted to see the market at least try to rebound today, and it was positive for a while. In fact, futures pointed to a positive open earlier today, but sellers are still around in this market. My general take on the market, certainly the technical picture of the Nasdaq composite, and really all the major stock indices for that matter, continues to look quite weak. The Nasdaq composite is now below its 50-day moving average, which is a technical sign of weakness. It's about 4 to 5% off its recent intraday high of 28.88. It would have to correct another 5% from here to get down to its 200-day moving average, which is currently around 25.95. I think that's perfectly reasonable to expect. I think a 10% pullback for the market, again, off the Nasdaq's recent high of 28.88, would shake some sellers out of this market, and after that we could see a new uptrend begin. I'm really not expecting, a brutal bear market to take shape here. I really am not looking for a major pullback in the 15 to 20% area. I think right now the Nasdaq could ultimately pay a visit to its 200-day moving average. Again, that's would be about another 5% pullback from here to get down to the longer-term level of support. Before the 200-day moving average, there's a recent low in the Nasdaq just over 2,700 that certainly seems within play at this point, and after that it's pretty much, again, the 200-day line at 25.95. So there are sellers in this market. There are concerns about Europe. There are concerns about the U.S. economy. Earnings season is pretty much over. It was a solid first quarter earnings season, no doubt about it. We've seen a lot of retail earnings reports come in over the past week or two that by and large have been very solid. We'll go over a couple of big winners in the retail sector in just a little bit, but let's check and see where we're at regarding other areas of the market. First of all, volume today on the NYSE and the Nasdaq, not overwhelming to the upside or the downside. Again, volume on the NASDAQ yesterday during the market decline was about 1.75 billion shares. Looks like we're going to come in close to that level today, maybe slightly above. NYSE volume yesterday was just under 1 billion shares, about 980 million. Volume very close to that level as well today. So mild losses for the market. There are still sellers around, and bottom line is I think the chances for more downside outweigh the potential for meaningful gains are here, which is why I've been been in a defensive posture in my ultimate growth stocks model portfolio. Taking a look at gold today. Gold futures on Tuesday ended above $1,500 an ounce for the third time in a row. Settled at the highest level since May 3rd, I think I saw. Gold for June delivery rose $7.90, or 0.5%, to finish at $15.2330 an ounce. We'll pull up the GLD here. This is the popular ETF, which basically tracks the price of an ounce of gold. You see the GLD up 0.5% today to 148.58, really showing good supporting action at its 50-day moving average during a time when a lot of stocks and ETFs are breaking this key support level. The GLD is showing good support at its 50-day moving average, and if money continues to come out of the market, I really think the GLD has a potential to continue to do well here. I think it could continue to work as a safe haven trade. Turning to silver. Silver for July delivery added $1.22, or 3.5%, to $36.13 an ounce. We can take a look at the SLV, a popular silver ETF. You know, my stance on gold is entirely different than that of silver. I think the gold trade can still work here. I think there's the potential for more upside. Silver, I'm not so sure about. This was when the gold trade got really crowded, all the money went into, it stayed in gold for the most part, but then moved over to silver. And you can see the silver, the SLV, broke out over $30 a share, ran up to $48 a share in a very short amount of time earlier this year, and then it just completely collapsed, fell below its 50-day moving average. Shares have found a bid recently, but it's still trading below its 50-day moving average. I think the 50-day line could turn into an area of resistance for the SLV. The SLV looks like it closed up 4.2% to 35.71. So the SLV has found a good bid today. I think the potential for its 50-day moving average, which is currently around $38 a share, I think they could see some resistance there. Could be a ceiling for the SLV in the near term. Crude for July delivery added $1.89, or 1.8%, to $99.89 a barrel. Goldman Sachs, Morgan Stanley, JP Morgan all made positive comments about demand, future demand, higher prices down the line, so that gave oil a bid. It settled at $99.89 a barrel. Let's take a look at the dollar. The dollar was weak today, but you have to give the dollar credit. It was able to recently climb above its 50-day moving average, an area I thought would be a resistance, but last Friday it finished near its intraday high. On Monday it gapped up. It finished near its low, but still higher for the day. It's now firmly above its 50-day moving average. The UUP, which is the PowerShares U.S. dollar index bullish fund, fell 0.3% today to 21.73, but again still holding above its 50-day moving average. The dollar's uptrend is intact for now. We had a big IPO today. Yandex, which is a big internet search company in Russia. It's Baidu is known as the Google of China. Well, Yandex is known as the Google in Russia. Shares finished the day at 38.84, up 11% on the session. Shares hit an intraday high of 42. Again, Yandex operates Russia's most popular internet search engine. Moscow-based company sold 52.2 million shares at $25 each. That valued the company at about $8 billion. I think its market cap is now north of $10 billion after its performance today. So still a good appetite for these internet IPOs. Of course, last week LinkedIn had a very, very successful initial public offering. A lot of people raised their eyebrows at the valuation of LinkedIn. Shares recently trading around $94.45, up about 8% on the session. It's a professional networking site. But all in all, I think the team at LinkedIn has to be pretty happy with the way this IPO has traded for the past few days. It's hanging in there quite well. Again, closed today at $94.45. Not much in the way of economic data today, but we did have some new U.S. New home sales data in the U.S. They posted their second straight monthly gain in April. That's according to data released by the Commerce Department. New home sales in April rose 7.3% to a seasonally adjusted annual rate of 323,000 units. That's after an 8.3% increase in March. So this data come on the heels of very weak data last week, existing home sales, housing starts, just weaker than expected data last week. So this was good to see, but still really a cloudy outlook, lack of visibility in terms of when the top line and bottom line growth is going to return for these home builders. Still not an area of the market that looks appealing right now. Coming up tomorrow, we've got durable goods orders for April. They're expected to decline 2% after rising 4.1% last month. Excluding transportation, orders should be up 0.6% after 2.3% rise in March. And on Thursday, a key piece of economic data, I'm going to be looking at this one closely, the second estimate to first quarter gross domestic product. It's expected to rise 2% after an initial estimate of 1.8%. Really hard to say how the market is going to react to this data. If the economy if growth is hotter than expected, does that mean the Fed is going to be forced to raise interest rates before the end of the year to cool down the economy? Yeah, not likely, but you never know. And if growth comes in below expectations, say 1% or 1.5% growth, is that going to fuel fears of another economic slowdown, which potentially would not be good for the market? So we'll have to see. I think the first quarter gross domestic product data on Thursday will be a key piece of economic data to watch. Finally, some interesting data today from IHS iSupply. The rise of tablet computers led by Apple's iPad took a bite out of worldwide PC sales in the first quarter as shipments of desktop and notebook PCs slipped. The research group said PC shipments totaled 81.3 million units in the first quarter, down 0.3% from the year earlier period. When we come back, I want to take a look at a couple of leading stocks that have been under quite a bit of pressure lately. I want to take a look at Apple. Speaking of the Apple iPad, we'll also take a look at Priceline, go over some other